Have you ever wondered how inflation can actually make you richer? While many people see rising prices as a threat, what if you could turn it into a golden chance to build your wealth? In this video, we'll explore how you can harness inflation to your advantage. We'll look into insights from renowned investor Bill Ackman and uncover strategies that can help you thrive in an inflationary environment. So stay tuned because you don't want to miss this. Before we dive in, it's essential to understand what inflation is. In simple terms, inflation is the increase in prices over time. When inflation occurs, the purchasing power of your money decreases. For example, what you could buy for $1 today might cost $1.10 next year. While this might sound daunting, there's a silver lining if you know how to navigate the landscape. To help us understand how to benefit from inflation, let's bring in a heavy hitter in the finance world, Bill Ackman. Bill Ackman is a billionaire hedge fund manager, the founder of Pershing Square Capital Management, and a seasoned investor who has made waves in the finance sector. His investment strategies and insights have helped many investors gain significant returns. According to Ackman, inflation, when approached correctly, can present lucrative opportunities. So, how can you take advantage of inflation? Here are 7 strategies inspired by Ackman's approach and other financial experts. 1. Invest in stocks. Historically, stocks have outperformed inflation. When prices rise, companies often pass on those costs to consumers, which can increase their revenues and potentially their stock prices. Investing in well-established companies with strong market positions and pricing power can help shield your investments from inflation's erosive effects. Look for companies in sectors like technology, healthcare, and consumer staples, which tend to be more resilient. Consider diversifying your portfolio with stocks that have a strong track record of performance during inflationary periods. Companies with a competitive edge, strong brand loyalty, and the ability to raise prices without losing customers are typically good candidates. 2. Real estate investment. Real estate is another powerful hedge against inflation. Property values and rental incomes tend to rise with inflation, making real estate a valuable asset. By investing in real estate, you can benefit from both property appreciation and rental income, which often adjust with inflation. You can invest in direct property purchases, real estate investment trusts, REITs, or real estate crowdfunding platforms. Each of these options provides a way to gain exposure to the real estate market without necessarily having to manage properties yourself. 3. Commodities. Commodities like gold, silver, and oil often rise in value during inflationary periods. These tangible assets have intrinsic value and can act as a hedge against the devaluation of paper money. Bill Ackman has highlighted the importance of commodities in an inflationary environment, as they tend to perform well when traditional currencies lose purchasing power. Consider allocating a portion of your portfolio to commodities through physical assets, commodity-focused ETFs, or mutual funds. This can add an additional layer of protection against inflation. 4. Inflation-protected securities. Treasury. Inflation-protected securities, TIPS, are government bonds specifically designed to protect against inflation. The principal value of TIPS increases with inflation, ensuring that the investor's purchasing power is maintained. These bonds provide a virtually risk-free way to safeguard your investments from inflationary pressures. TIPS can be a stable addition to your portfolio, providing steady returns while mitigating the impacts of inflation. They are a great option for risk-averse investors seeking a reliable hedge. 5. Diversify globally. Inflation doesn't affect every country in the same way. By diversifying your investments globally, you can reduce the risk associated with inflation in any single country. International stocks, bonds, and real estate can offer exposure to markets with different inflation dynamics. Explore investment opportunities in emerging markets and developed economies that may experience lower inflation rates. This geographic diversification can help stabilize your overall portfolio. 6. Keep a cash reserve. While it may seem counterintuitive, having a cash reserve is crucial even during inflationary times. Cash provides liquidity and flexibility, allowing you to seize investment opportunities quickly. Ensure you have enough cash to cover emergencies and potential short-term needs. Keeping a portion of your assets in highly liquid forms, such as a savings account or money market fund, ensures you are prepared for unexpected expenses or opportunities that may arise. 7. Invest in your skills. One of the most underrated investments is in yourself. Acquiring new skills, certifications, or education can significantly boost your earning potential. In an inflationary economy, the ability to earn more can protect you from the rising cost of living. Bill Ackman often emphasizes the importance of continual self-improvement and adaptability. Investing in yourself might include taking online courses, attending workshops, or pursuing advanced degrees. By enhancing your expertise and staying competitive in the job market, you can increase your earning capacity and better withstand inflation. 8. High-quality bonds with shorter durations. While bonds can be risky during inflation due to the rising interest rates, high-quality bonds with shorter durations can be a safe choice. They are less sensitive to interest rate changes and provide a steady income stream. Look for corporate bonds from financially stable companies or municipal bonds that offer tax advantages. Selecting bonds with shorter durations reduces the risk of capital loss if interest rates rise. Focus on bonds from reputable issuers to ensure credit quality and dependable returns. 9. Market index funds. Instead of picking individual stocks, consider investing in market index funds that track a broad market index, like the S&P 500. These funds diversify your investments and typically include companies with a solid track record of thriving in different economic conditions. They provide lower risk and steady performance over time. Market index funds offer a convenient way to gain exposure to a wide range of companies, spreading risk and reducing the impact of inflation on your portfolio. 10. Inflation-resistant sectors. Certain sectors such as healthcare, utilities, and consumer goods are more resistant to inflation. These industries provide essential goods and services that people need regardless of economic conditions. Investing in companies within these sectors can offer more stability during inflationary periods. Identify companies with strong balance sheets and consistent demand for their products or services. These defensive sectors can provide a reliable source of income and appreciation even when inflation rates rise. Bill Ackman's insights can guide us in transforming inflation from a threat into an opportunity. By employing these strategies, you can protect your wealth and potentially even grow it during inflationary times. Remember, the key is diversification and strategic allocation of your assets. Inflation presents both challenges and opportunities. By staying informed and proactive, you can turn this economic phenomenon into a golden chance to build your financial future. Investing wisely, adapting your strategies, and protecting your purchasing power are essential steps toward achieving financial success in an inflationary environment. If you found this video helpful and want more tips on finance and investing, make sure to subscribe to our channel. Hit the bell icon so you never miss an update.